Today, we're going to talk about an issue that's been making headlines lately, the commercial real estate market. And trust me, this is something that you definitely want to pay attention to, especially if you're thinking of investing in real estate in the future. So what is the commercial real estate market? Well, it's the market for properties that are used for business purposes, such as offices, stores, and warehouses. And it's not doing so well at the moment. You see, with the pandemic, many companies have shifted to remote work. This has led to a rise in vacancy rates, meaning that many commercial properties are sitting empty. And when a property is empty, it's not making any money for its owner. In turn, this has caused property values to fall, but that's not all. There's also a big problem with refinancing. This means that many commercial property owners will need to renegotiate their mortgages in the next 24 months. And this is where things get really worrying. Lisa Shalett, the Chief Investment Officer for Morgan Stanley Wealth Management, has some concerning figures. She notes that more than 50% of the $2.9 trillion in commercial mortgages will need to be renegotiated in the next 24 months. And what's even more worrying is that new lending rates are likely to be up by 350 to 450 basis points. To put that into perspective, if you have a $1 million loan, your interest rate could increase by up to $45,000 per year. That's a lot of money. And it's not just the interest rates that are concerning. Many regional banks have accounted for 70% to 80% of all new loan originations in the past cycle. And with the implosions of Silicon Valley Bank and Signature Bank last month, all eyes are on the sector. So what does this mean for investors? Well, analysts are predicting a peak to trough commercial real estate price decline of as much as 40%. To put that into perspective, if a property is worth $1 million today, it could be worth only $600,000 in the future. That's a huge loss. Tighter lending standards for the commercial real estate market are now likely. Stricter lending standards were already in place with the Federal Reserve raising interest rates in its attempt to lower inflation, and the banking crisis will only exacerbate the existing lack of liquidity. This distress will hurt landlords and the bankers who lend to them, trickling down to business communities, private capital funders, and owners of underlying securities. And it won't just affect the real estate sector. Even the tech and consumer discretionary sectors won't be immune. So what does this mean for you? Well, if you're planning to invest in commercial real estate, you should be cautious. With falling property values and stricter lending standards, it's becoming harder to make a profit. On the other hand, if you're looking to rent an office space or start a business, this could be a good opportunity to negotiate better deals. It's important to understand that investing always comes with risks, and it's important to do your research before investing in anything. Keep an eye on the market and understand the risks before making any decisions. In conclusion, the commercial real estate market is facing a huge hurdle, and this could have far-reaching consequences. As always, we hope you found this video informative. Please give us a thumbs up if you liked it and subscribe to our channel for more updates.